How many traders out there would be interested in making, just say, a minimum of $200 a day? Now, what would that provide? Provide you an extra means of maybe paying down some debt, maybe student loans, or going on vacation, having some extra money to put in the savings account, put away for your child's college education, whatever it may be, okay? Double up on the mortgage payment, okay, in a sense of putting more money down or on the car note. I'm going to show you a strategy that's really easy for all those that have pretty much educated themselves, meaning understanding and learning the proper way to trade. Trust me when I say this. The key to really finessing the market and really understanding it and trading the correct way is understanding its movement in regards to market structure. So we're going to take a look at just the structure of the market based upon or surrounding just some entries I'm going to show you today. But I'm going to show you the strategy and how it unfolds and actually works. Now, again, the video is to express for those that really are interested in making an extra $200 a day. It doesn't matter if you trade the E-minis or the micros, okay? So, yes, you can trade the micro futures and make $200 or $200 a day doing or practicing the same strategy, what I'm trying to say, okay? So let's take a look at this. First, what we want to do is look at the structure of the market. I'm going to show you two demand setups, for example, okay? And we're going to go into kind of detail about each one of them, how I'll break the strategy down. So pay close attention. Always what I like to see when I'm interested in taking a trade back in my zones, okay, or taking a trade at all, whether it's supply or demand, I want to see, is there a breaker structure? BOS. That is a key essential part to the strategy, to the ingredient, to the recipe overall, and what I'm looking for. So as we can see here, the market has been moving down, kind of chopped right here, then it been breaking structure to the downside. Okay, on the 19th going into the 22nd of July, we can see the market start to ramp back up, making higher highs and higher lows. That's what structure is. It's being able to identify is the market continuously trending to the upside, making higher highs and higher lows, or is it starting to break structure where it's making lower lows and lower highs? In this case here, we're moving back to the upside. This is on a 120 range chart. Now, you can see you'll be able to identify structure. Doesn't matter what type of charts you trade, whether it's time, tick, or volume as well. But I specifically like to trade range charts, okay? It's just, to me, it's just a preference. All right, so the market moves higher. We can see it's breaking structure above this area here at 19,977. This is a major structure break right here at 977, okay? So when it breaks that area, again, this is on the NASDAQ, okay? It's moving to the upside. Once it does that, you can start to mark off some key areas or demand zones. Demand is aggressive buying and selling within the market, okay? This is a demand zone, all right? It's pushed to the upside. Now, one of the most important steps or factors, I should say, when it comes to the strategy, how I trade supply and demand, is did the market leave behind a unmitigated zone, meaning a zone where there's a gap back at where it hadn't been tested yet. So when the market made this push to the upside, it didn't immediately come back to the zone. So that is an area or a zone of interest to me, because more likely they'll come back there and continue trying to push higher. Now, below that, there's another area too. So when it comes to trading supply and demand, you have to weigh your options if there are multiple zones that may rest below, an area of structure that it just broke. Like here's a demand zone. Here's a demand zone down here. There's also another small one down here. But I like these two here because there was more aggressive buying to the upside where there was, a significant push within the market. All right. Now, one thing that I like because of this zone right here is that we are above the volume weighted average price for all those that asked about the yellow line. Now, this one here, when it comes back to the zone, you see that when it comes back to the zone, if you take a look prior to it coming back to the zone, the market was above the VWAP. Now, when we break below and come back to retrace to the zone, we're below the VWAP. But still, here's a pullback opportunity to where once it does come back to the zone, this was a aggressive buying area to where the market at that time was above the VWAP. So I'm still interested in that if the market comes back there, because it could definitely reject as it did here and continue pushing higher. So now that we have both of these marked off on our charts, we're going to go down, and all I do from this point here is when I mark up a zone off of the higher base chart, I just move down to a lower base entry chart to look for a trade entry, okay? Again, I move down to a lower base range chart, which I'm going to show you on my 24 range chart, to where I am starting to identify an entry point to get into the market, either at this zone or the market pulls back to this zone, or possibly both. Okay. But what I want to show you right quick is, let's just say you were interested in trading the micro. So if you were trading the MNQ instead of the full on NQ, let's take a look at a calculator right quick. Now let's just focus on, for example here, if you are trading the micros again. All right, so for every point in the NASDAQ is 4 ticks. So if we're looking for 20-point run, okay, 20-point move, okay, times 4 ticks, that's going to give us 80 ticks. Now, the tick value for the micro NASDAQ is 50 cents a tick. So times 0.5, okay, that's $40 per point, okay. And then we do, I'm sorry, I meant to say $40 per contract, not per point. So if you're trading 5 contracts times 5, that's going to give you the $200 that you need, okay. Now, if you're trading the E-minis, really you only have to trade, this is just the NQ, not the MNQ, not the micros. You can just basically trade one contract pretty much, because 20 points times 4 ticks, that's your 80 ticks. Excuse me. And the tick value is $5 a tick on the NASDAQ NQ. That's going to give you $400, okay? So as you can see, there is a difference there, but that's only because the tick value or the tick size is higher for the full-on E-mini NQ or NASDAQ versus the micros, okay? So understand that. But just 5 contracts on the micros, and you're not really leveraging a lot of money, because, the micros, because of the tick size value, you're not having to take on as much risk if the market was to come back. You just need to know where to get the trade at, all right? So I just want to show you that is definitely doable and definitely possible. I'm making them a minimum of $200 a day. That's fairly easy. So you do that, 5 days a week. If you can do that 5 days a week, then you're going to make $1,000 a week, an extra $4,000 a month, okay? Or a little bit more than $4,000 a month. That's gross before commissions, okay? So back over here on the charts, we're going to move down to the 24 range right quick, and we're going to look at this area right here. This is around 10:15 on the, what did I say, the 19th. Okay, so this area right here, that box, that green box, is the higher base time frame or base chart zone, demand zone. Once I'm down and move down to my 24 range chart, all I'm looking for is just basically what the market is showing me a correctional move to the upside where it's breaking structure, and then I'm marking up a new demand zone, not supply. Okay, so here's an area, say for example right here. All right, we'll take a look. So we can see where the market again is pushing to the upside here. The lower base chart, I'll move this box, I'm gonna show you the structural break right here above this area here at 19,027. Pushes higher, it pulls back. This right here would be a let's grab the box first. A area right here, let me draw it off, of demand right here. Okay, this is an area of demand. You can see it, aggressive buying to the upside. When it comes back to that zone right there, all we're looking for is the break, close on the candle above, and we can go long. Now, if you notice here, I mean, if you really notice, where would I possibly be interested in taking a trade back up to? All right. Well, this is supply right here, so be careful when the market gets back up here. All right, in this area here, because it could reject it. But you get in somewhere between, like 922, you can take it on up here to 931. But the aim is really going to be targeting this area of liquidity resting above here. Okay, this is the prior high, the most recent high that it made on the pullback to the newly fresh or the new demand zone off of our 24 range entry chart. Okay. So if you move over to the, or scale back up to the 120, this area right here, you can see that this high right here as well could be a focal point because there's liquidity resting at the top end. But be careful, because this is an area of supply. This is a supply zone right here where the market, started making a selling off pretty heavy right here. So be careful, or just be mindful when the market gets back to this area here that it can reject, as you can see it did on the higher base chart. Move down to the lower base chart, you can see, okay, we got room where the market can move all the way back up on the higher base chart to the supply area, back up here around 987. So we know for sure that this smaller area or smaller high that it made, the most recent high on the lower base chart, that is an area of liquidity in which the market can definitely run. So you get into the trade, the break and close of the candle on the lower time frame or lower base chart, 24 range demand zone and take it back up to this area here and pick yourself up an easy, 20 points or more. But this is more so like, say, 22, 23 entry point, back up here to 70. Yeah, I mean, you're picking yourself up. That's roughly almost 40 points. I mean, excuse me, not 40 points, 50 points right there if you can hold that trade. Most people, by the time the market comes back up here and it starts to shaking with 2 candle closes to the downside, or where it breaks below, say, the last bullish up candle right here to the downside, they're probably going to get out of the trade because they're thinking the market's going to come back against them. But this is a simple strategy. You're just using 2 charts, using one to mark up the higher chart, the second one to look for the entry. So it's the same thing that unfolds. Looking for the same type setup, a demand setup, demand setup, demand setup on the higher base, demand setup on the lower base. So let's move to another setup right quick. So now we see the market comes back a little lower, right? It taps this next or this other supply zone, demand zone resting below, okay? Now, let's move down to the lower base chart and take a look at that right quick. Okay, I got it on all charts so we can see it. Let's move on down, scroll to the right. Okay, so this blue box, rectangle box, is that exact higher base zone that I want to show you. Same thing here, we're aiming for 20 points to pick up those $200 if we're trading the micros or even one contract on the E-mini NASDAQ. It's going to give us what we need, of $200 plus a day. All right, so we're in the zone now. This is the zone on the 120 range chart. Okay, so what I'm looking for now is a structure break to the upside. Well, it's a structure break right above here at 19,834. Once we break that area, I'll be interested, in the market pulling back to some key area of demand. Well, that aided in the structure break above this area here as it was moving higher, making these higher highs and higher lows. So when it does that and pulls back, we don't have a, I say, unmitigated or gap at the zone to where in any key area supply. So when the market pulls back here, it doesn't provide us that opportunity with a high probability setup with a gap there. Okay, so when it pulls back, you can almost filter it out and say, I'm not going to take the trade. But one thing I do want to point out is that be mindful if, for example, here's another type of trade that you can, or strategy you can use to trade when scalping the NASDAQ or any particular future market. Okay, it comes back. It's what we like to call liquidity sweeps or liquidity grabs. When it comes back and it breaks below this area right here, okay, I'm interested because I'm looking to see, okay, where there's no demand zone right here where I can actually mark up, because it's when it, right here, there's no gap or there's no, it's unmitigated. So when the market gets back there, you can see where it breaks right below and it pulled back right below this area at 19,815 with that wick of that candle. That's a liquidity grab to where they're running lows, all right? So it pulls back and it breaks right below slightly with the wick of that candle. Let me go right here, okay? Right here, it wicks right below that area there. Now, that is what is classified as a liquidity sweep or grab. Okay, when it does that there, this is a different type of a strategy you can use outside of supply and demand. You look for just the break and close of the candle, same thing, and look to go higher. Okay, so it pushes up and then it does come back. The market makers like to do this because they like to fake traders out. They know people are buying right here because this is an area where they ran liquidity at, and people who are familiar with this type setup will enter this trade and they come back and try to shake you out the market. But by the time they've actually already done that, the market's already ran up about 20 points and you've already collected on your 20 points before it actually pulled back. So those are 2 specific type of strategies that you can use, supply and demand, or trying with the liquidity grab opportunity here, because this was a nice liquidity sweep or grab back at this zone right here. So those are the 2 type of strategies I want to share with you today. Just letting you and showing you a way here, right here in 2024, even with how the markets are moving. Yeah, we're gearing up for elections. The market's been kind of acting weird. But when one thing doesn't work, you could try something different, okay? But to me, primarily, most of my trades, the setups I like to take are supply and demand. But if I see a nice liquidity sweep, I'm going to take it, okay? Especially in this example right here, to where I was waiting for an opportunity and I didn't see anything unfold with a clean demand zone, so I would take that interest or that opportunity there to take that trade on a liquidity sweep. But that's all I want to show you today, guys. Hopefully you found some value in the content. If you're a first time viewer and you haven't subbed to the channel, please take the time to go ahead and click on that subscribe button. Make sure to turn on all your post notifications so you don't miss one of the uploads. If you're interested in more trade breakdowns like this, actual trades that I took to go into detail about stop loss placement and TP, profit target areas, walking you through, trade examples on trades that I actually took and I posted over on our Discord community. Interested in joining the Discord? That's free. Find 2 links down in the description portion of the video. Just scroll down in the description portion. You'll see 2 links. The first one is the Discord. That's free. The second one is to become an elite member. If you click on that, 2 tiers will pop up. Choose the tier for $6.99 a month. What you're doing is support my efforts as a content creator, provide honest, valuable content for you, but I give things back as far as rewards and perks through the YouTube tier membership program, and one of those being the trade breakdowns, to where I got tons of videos on there showing you example after example about trade setups and trades that I took, okay? So if you're interested in doing so, that link is in the description portion of the video. Yes, you can become part of that private community and gain access to those videos as well for a very, very small fee of only $6.99. Outside of that, if you found value in today's video, please do me the biggest favor and click on that like button if you found value. Take care, and I'll see you in the next one.